Traders, welcome back to the channel, and it is my pleasure as always to have you all on board. And honestly speaking, we are really enjoying reading your comments together with the team and ensuring that we are providing the value necessarily needed for you to have the insight regarding the system that we are using, which is the Falcon system, and as well gaining the insight for anyone who is not trading the system on how we really go through the trades, on how we really cover the markets, and specifically into the contents that we provide on a consistent basis. Now, into today's video, I'll be covering something that is different. However, it will provide so much clarity into your trading, because these are the common errors that most traders make when executing their trades, and I will explain directly, giving you an example from the market standpoint so that you can deeply understand when and where you need to improve, and in which specific areas and in which specific time frames you need to concentrate the most so that you are not left behind. Now let's go just straight to the chart rate, and here I'm using NZD/JPY as my primary example. And let's start off from the daily time frame, talking our way through to the lower time frame, which are the H1 time frame. Now, as we can see from the daily time frame standpoint, we can see that we are looking to take advantage of this particular run of price to the downside to really come back to these particular lows. And the reason being that we can see we have a slightly near miss around the areas, so there is a very high chance of the price to really come back to this particular low before we see any shift. And the good thing is, as we can see from the market, this is likely to form a evening star formation. We have a candle like so, and these three will form something called the evening star formation. Now we can see price has already rejected on that particular area, which we can see it even more clearly into the H4 time frame. Let's just go to the H4 time frame and dig up and see on how the market is really painting the picture for us. Now, from the H4 standpoint, we can see that on this particular area, which was our footprint, because previously you can see the price from there came back to that exactly same area, formed a double top, or call it a V formation. We impulsed to the downside, left a footprint, and then we started to see that shift in the market or movement to the downside. And now price just came exactly back to the same area, broke above, broke back in, and now we can see that we have finished with a rejection candle, which is not the strongest, because in this case, because if it was a bearish candle, a strong one with clear engulfing, I call it a bearish engulfing candle, it could have printed a different picture. But as for now, with this case of just finishing with that rejection within itself, it already gives us a clue that we need to be a little bit patient, because the market might be telling us a different message. Now, there is something that I want to provide here for you as a clarity, okay? And here's the thing. If we just look into this box, we can see the price was ranging around this particular area. However, we can see that now we have cleared by impulsively moving to the upside. Even just going back to the H4 time frame so that we can see even it more clearly. We can all see and agree that this area now has been cleared, and now we can see there was a clear impulse to the upside. And now there are two things that we are now looking here: either the market to push to the upside or the market to push to the downside. Why? It's because of the clue that we have seen from the H1 time frame. Now, what's the H1 time frame telling us? We can see that, just to put there an arrow so that you can see and understand. It has shown us we have already cleared that particular area, even just using this most recent piece of information over here. We can see we have cleared that particular area with momentum. So there is a clear impulse to the upside. And what do we see at these edges of the area, or area of volume over there? We see two things over here from my perspective. Here's the clue. You either wait for something like this, the price to give us 3 touch, which this would be first touch, second touch, and here your third touch, for the price to still move to the upside. That's the first thing. And the second thing is that we'll be waiting for a clear impulse to the downside, followed by a continuation to still take that advantage of the price to move to the downside. Why? Because at this stage the H4 will already be confirmed to us, because the candle will be already closing down here, which will be a clear retrace and giving us a clear confirmation that something has changed. But as for now, we stay a little bit neutral and see what the market is likely to do next. Now let us see, just by forwarding the price within itself, and see what was happening here in this particular area. Okay, let's just forward this particular piece of information. Yes, let's just forward it and see if the price for what it is. Now here's the catch now. Okay, now here's the catch. To an average trader, they will already see that from the higher time frame, which is the daily time frame, they are looking to come to the downside to fill these particular lows. Okay, and then from the H4 time frame, they will come and say, we've already started to see some selling opportunities or clear signs of the market just selling off. And then from 1 hour, they will see something like this. Just to rewind the price back. Now, if we just have a look into the market, we can see that we have something like this. Okay. Now, because the market was either going to the upside or the market just is moving to the downside, we had that standpoint. However, an average trader at this stage, they will have FOMO, and this is the error that they will be making, because just they see here from the H1 time frame, this is a structure or pattern that it makes sense to them because it's a pennant and one that we understand, right? They will see, oh, the price has started pushing to the upside, and there was a chance that the market would have already started moving to the upside, or the market is having a higher chance of moving to the upside. Why? Because we have cleared these particular highs, we have that impasse, and this is a correction for the next continuation. So what they will do, they will set a market execution order over there. They'll enter and they'll say, there, I'm quite so safe, so just moving back to these highs over here, just to clean up the chart so that you can see it more clearly. I'll be moving around 1 point something so I can move to break even, and if it becomes the one that goes, then we are in for a treat. However, here's the clue. Listen guys, the market always communicates with us because it gives us some signs that as traders, depending on our system that we are using, they are privileging us or giving us that particular edge to really have those pieces of information what the market is telling us. Now, for any experienced Falcon trader will agree this with me. Whenever the market just forms this 1, 2, and then there is a very slightly a near miss around that third particular area, like here, it's always a sign that the market has left that particular piece of information for a reason, and there is a very high chance the price will just gravitate back to those particular area. Okay, it will gravitate that. It may be directly or it might take some time. However, the key thing is it will gravitate back to those particular area. The clear thing here is always when you see something like this, don't have FOMO, don't have the pressure of missing out, because at this stage, if I go just to 15 minutes, I'll see this as still part of price action. Why? Do you see this? This trend line has cutted through the price, so it is already telling me a clear clue, a clear picture that there is a higher chance of still the price to extend or further develop. And now this is likely to be a middle section of the price. Okay, and as for now, we don't know yet what is likely to happen next, but if that is something that extends like so, then if we just go to 1 hour, we can see it even more clear that, okay, now this is a clear middle section, and the price has a very higher chance of coming back to here to form that 1, 2, and this being my third touch to still take the advantage of the next run to the upside, or if not, I'll just be waiting if we are going to impulsively break that particular area, and so waiting for the price just to form a continuation and then move to the upside. However, just because of the bias that the traders had or they are having for the information and the clues that they stuck together, is that most of them will already be getting involved in this particular area over here. And let me show you exactly what the market just resulted into. So now let me show you what just happened next. Do you see? You are tagged in and you set it over there, maybe your stop loss just underneath over there. Then see what happens. You are tagged out. You can see tagged in and tagged out very quickly. Why? It's because of the emotional decision that you made into your entry. Now, the reason that I was saying that you need to pay attention into this is that always trading is not full 100% mechanics. Okay, it is a discretional thing. You need sometimes at some point to really understand when and where to apply what and what. You need to understand very clearly as what the market is trying to communicate with you, because sometimes you can take these particular entries and just get unnecessary losses, and then you start beating yourself up. However, the market was just telling you a clear picture. What picture was it telling us? It was telling us it's likely to form a third touch, because that was not a complete third touch. So that is something that I wanted to really inform you, and so that you can understand clearly. I hope this video helps you so much to gain the clarity into the errors, especially using the time frame to your advantage, and being also very aware that things change up and you do not need to marry a bias or being a full mechanical trader. So traders, thank you so much for tuning in, and please make sure that you subscribe to the channel, like the video, and as well share with others that you find that they will get value from it. And as well, we ask for your support, and that is just subscribing to the channel, because it costs you $0. See you in the next one. God bless.